Welcome to Smart Investing Market Insights on TFNFinancialNews.com. I'm Krista Das. The G7 finance ministers and central bank governors focused heavily on global economic developments and financial market turmoil at their meeting last week. Here to shed some light on the discussion and what it means for currency trading is global strategy analyst and editor of World Currency Option Alert, Jack Crooks. Jack, welcome to the program.
Hi, Krista. Thanks for having me back. I appreciate it.
So, Jack, tell us what was accomplished at the G7 summit.
Well, some interesting things were accomplished. Nothing major, but interesting nonetheless. I put a piece out on Friday. Hopefully all the subscribers to the World Currency Options Alert were able to get it. It was an audio update on the G7. And what I pointed out and expected was, number one, that they would probably team up a little bit on China because of China suppressing its currency. That was in the news, and we saw stories leaking out that the G7 were concerned about that, and sure enough, they commented on that. But one of the things that the market was watching was to see whether or not the G7 was going to make some type of strong, concerted statement in favor of the dollar. The fact is that they didn't. They didn't come out and say anything really powerful, which indicates that, hey, they're very, very happy with the falling dollar here. The third thing that they did point out, which again was interesting, is this idea of more concern about risk and credit risk in the global economy. They made a pretty strong statement on that side of the fence. So there are different cross currents coming out, and that's why I say it's very interesting. But in general, it's all very positive for the Japanese yen.
So the yen is looking good, and the U.S. representatives that attended the summit were too embarrassed to cause too much attention to the falling dollar. So the Chinese yuan, it seems that all eyes have been on this currency for the past 2 years.
Absolutely. I mean, that's really become the kind of the key currency that traders have been watching for a while. And a lot of things are keying, not in terms of globally, are keying not only off the currency, but off of what's going on in the Chinese economy. As we know, the Chinese economy has been incredibly strong. And it's been incredibly strong, and the yen, and their currency, the yuan, has been incredibly weak because China has suppressed the currency. And it's putting a lot of pressure on other export countries, and now Europe is starting to feel the pressure. And finally, we're starting to see Europe team up with the US and Canada to bash China. So this is a new event that could put some upward pressure on the Chinese currency.
Now, I've also noticed that other Asian currencies directly benefit from a stronger yuan. Why is that?
Well, it's pretty straightforward in that the Asian bloc currencies compete with China heavily for exports to the West. So if China's currency is suppressed and very low, they're going to do everything they can, the other Asian bloc nations, to keep their currencies low relative to China. If they let their currencies run higher, again, they're going to lose competitiveness against China. So they go hand in hand. A weak Chinese yuan, which is the biggest driver of exports in Asia, kind of suppresses the other currencies in the region, or at least forces them to try and suppress their currencies as best they can.
Now, getting back to the Japanese yen and the Swiss franc, they both have been rallying sharply. Do you see enough reason for these currencies to continue their upward movement?
Sure, yeah, absolutely. And again, goes back to what the G7 talked about. They were concerned about credit risk in the global markets. And that's why we're seeing the Japanese yen, the Swiss franc start to move higher. The reason is these are both carry trade currencies. And when you have risk coming into the global marketplace, and we've seen a lot of risk, and it's coming right out of the financials, which are really the key credit areas, needless to say. I mean, we've seen the major banks, Capital One, we've seen Bank of America, we've seen Wachovia, and now we're seeing Merrill with some big write-offs. We're also seeing problems in Europe, as you know, not only in the UK with the Northern Rock, the big lender, S&L lender there. We're also seeing problems in European commercial paper funds throughout the continent. So there's some huge credit risk out there. And the reason credit risk helps these two currencies, the Swiss franc and the Japanese yen, is the fact that these are currencies that have been borrowed in order to use the money to invest in other risky assets. So when credit risk comes into the market and people unload those risky assets, so to speak, they tend to buy back the Japanese yen and also buy back the Swiss franc at the same time. So I still think there's plenty of juice and plenty of reasons for those two currencies to move higher.
Tell us more about credit lending worries in the U.S.
Well, the credit lending worries are really pervasive. I mean, we've had the Fed, pumping liquidity into the system, more and more money into the system because there are some major dislocations at the long end of the credit market. What I mean is there's people that need funding for takeovers that were announced prior to these problems cropping up. We still have basically a shutdown of the derivatives market, and we're seeing really a tightening on any new lending on the mortgage side, and it's also feeding into commercial real estate. So you have not only residential real estate in trouble, you have commercial real estate starting to come down, and this is all related to the credit crunch and the problems in the U.S. market. And as I said, the G7 talked about this, and it seems like the market's not too concerned about it, or at least the market, meaning those investors in the market. They're still driving up risky asset prices, Chinese stock market, U.S. stocks, and whatever. So it's an interesting situation.
Jack, as always, great information. Unfortunately, we're out of time. Thanks for being on the show.
Krista, thanks for having me again. I appreciate it.
That's all for today's show. If you would like more information on Jack's currency predictions, please check out his trading research service, World Currency Option Alert, by clicking on the screen at taipanfinancialnews.com. Until next time, here's to great profits from smart investing.